Alright guys, so we're going to be talking about tape reading in this video, and a lot of members have asked me to make a video like this, so I found that DTSS was a good example. So I actually recorded some of the screen footage. We'll go over that, and I want to just talk about how you can use the tape to plan your entries, along with technical analysis, and how to actually use the tape to know when to exit the trade and take your profits. So we'll get into that in a bit, but first I wanted to talk about the pattern we saw in DTSS. And if we look at the afternoon setup here, we see that the 15-minute 9 EMA, so the 15-minute chart was holding really well all day, right? And that's great for longs, but what happens is we get the hourly, which is the bigger time frame, to be extended. And as many of you guys know, we never long in the afternoons when the hourly chart's extended, simply because it hasn't pulled back enough. It hasn't had a chance to really trap shorts, and the stock is just way too overbought at this point. So when the 9 EMA indicator is way down here, that's a signal. It's a momentum indicator telling you that this stock is way overbought. It's due for a pullback, and all you have up here is overhead longs with no shorts trapped at all. So there's no fuel for this move to go any higher unless it dipped down and did a sort of a reclaim and then set up a squeeze later. But yeah, for this setup, it's one of my personal favorites, simply because there's so much meat on the bone. When that hourly chart's extended, and you can just capture a really nice win. And these are the trades you guys should be sizing into. Of course, sizing comfortably based on your account size and your comfort level. But these are the trades that are really going to pay you. Now, unfortunately, I missed this trade. I didn't take it. I should have, but I just didn't. But some of you guys caught it, so great job there. And so I wanted to talk about the setup here. So what we were seeing. So basically, we saw this consolidation near the highs, and it was pretty much holding the support level here around, if I'd say 550s, 560s. So it's holding this support, which was this previous resistance right here. It's 560-ish area. And what that tells me is, longs are really dip buying it here, and shorts are actually covering. So shorts who are jammed up from this move here, they're probably trying to cover out for break even, right? Now, still is a chance for the stock to go higher. So it's not a guarantee that the stock's going to have a pullback, but it's a very high probability that this stock is not going to make new highs towards the close. When the hourly is this extended, it's very highly likely, I would say 85, even 90% chance to correct, so pull back. And that's exactly what happened here. So now comes the question, where do I enter? Where do I get in? And typically we like to get in right as the momentum breaks, but that can't always be easy. It's really tough to catch those moves right on the money and right on the dot. This provided, this level right here, it looked like it was going to break down and then just trapped shorts, and look at that, just squeezed them out right there into that move. So there's spots in here where you might have gotten in early and gotten trapped and cut your loss. But the way I like to look at it is when you're looking at the 15-minute chart. So we look at the 15-minute. It never actually really broke under the 15-minute chart in any of these dips. So if you look at these dips, have that 15-minute chart right beside you and see if it's actually breaking under the 15-minute. So there was no reason to be shorting any of these candles here, simply because there was no break under the 15-minute. Notice how it's getting just dip bought aggressively with these wicks. Dip buyers are coming in at that level, and it's clearly not a short. So if you try to anticipate the breakdown, you're going to get caught, and you're going to just be shorting into support basically. And that's not what we want, right? With this strategy, we want to be nailing it right on the perfect timing, because otherwise we're just shorting into a support level. So it's always safer to actually be a little bit late than a little bit early, in my opinion, and wait for that 15-minute candle on the 15-minute chart to actually be breaking that 9 EMA. So it didn't actually break until this candle right here. this last 15-minute candle right here, and that was this move right here. So you could have gotten short, I would say, break of 560s. You could have got in 565, maybe 570, anticipating it, but we'll go over that on the tape and we'll discuss that more, so you can kind of see what was going on. But these are the type of trades that are going to really grow your account, and this is where the real money is at, and these are the trades I love. So let's go get into the tape and we'll discuss what was happening around this level just before the breakdown, and we'll kind of see, you'll notice there's a lot of bidders on the tape on the level 2, and a lot of hidden size as well, so a lot of hidden orders, and it seems like there's a lot of soaking and a lot of bid soaking, and it almost kind of seems like it's going to be a trap for shorts, but then they just pull the bids that last second and the bids just drop immediately 20, 30, 40, 50 cents within a minute. So let's review that and let's go over the tape. So we'll start off the recording a few seconds or a few minutes just before the breakdown, and so far it's kind of trying to hold a lower high here around $6. So we can see it kind of made that lower high up here at around 625. And now we're getting some selling, so a lot of sells. Just look at that, 9,000 shares just went through. Some sellers just came in right there. And it looks pretty weak here, right? A lot of sellers stepping in. This is where you're interested in getting short. So right here, you see the sellers, the pressure coming in. You'd get in short anywhere right here, 60, 65. That would be a good entry. And your risk would be 625. So let's say you jump in short here, 65 or 61, and you're short, and now your risk, you have a clear risk level, so you're risking about 60 cents. And there we go, the stock just broke. So let's rewind that a little bit. Let's go back a bit here. So notice how quickly that happened. If you actually waited for the 61 level to break, you probably wouldn't get filled. Boom, just like that. Boom, those 51s getting taken out. And there's a lot of, and there it just drops again. There's a lot of hidden orders there, as you noticed, but those don't stop the selling. There's just simply too much supply. And we get a really nice wash there. And let's pause it there for a second. So now I want to look at the chart and show you guys what's going on here. So most of the longs, if we look at the volume on this chart, look at this big volume bar right here. This was arguably one of the biggest volume bars traded, and it's a bullish bar, right? So it indicates a lot of buying. And if you notice, the buying, most of it, the majority of buyers are over $6. So that tells us most of the longs are trapped in this $6 and above range. So what do you think they're going to do when the trend breaks on a stock? Obviously they're going to panic, right? They're in pure panic mode. The stock is no longer trending. It's no longer in their favor, and they're going to bail. And there was plenty of volume and plenty of longs up here to create this big move that we're about to see, along with the shorts that come in. And this is a sketchy company. I think it's a Chinese company, so you never know. There could be also insiders selling as well. I don't think there was any news or any catalyst on this stock. It just came out of nowhere on the scans. So probably a pump job. But you can bet like there's some insiders and some big sellers trying to, lock in their profits. So let's continue the tape here. Now, if I took this short, 565 average, let's say, my first target would be 450. Now, why 450? We look at this level right here, previous support, 450. That would be my first target. So it's approaching that level, boom, it just filled. Would have gotten filled partial right there. Okay, it's still looking heavy on the tape. So notice the tape. I believe we're going to get into a halt here pretty soon, but just look at the tape. You see green prints flooding in, but the price is not moving. Very bearish, right? A lot of hidden sellers on the offer. Longs are probably trying to get on the offer and get the best sell they can, trying to bail. But once they see that the offers are not budging, they're going to start to hit the bids because they see the stock is not bouncing. It's clearly bearish. So they just want an exit. They're going to slam the bids and just jump out. So we'll see that in a second here. Seller stepped in right there. So you see how they're attempting to bounce it here a bit. It's just not budging. And we're going to see some more downside here. Look at that, green prints, it's just not budging. Here comes some sellers. If 450 breaks, this thing's probably gonna head lower. 450 is a psychological area. So those 450s are getting taken out. Probably some hidden buyers or short covers there. And there's our next leg down right here. And I believe we get into a halt pretty soon here. There we go. So it's looking really good if you're short. No reason to cover yet. And I'd be looking for my next cover target under $4 because that was this consolidation range over here. So a lot of support will be over there. I'm anticipating support will be here. So I'm going to be covering some here. And I think we're getting into a halt here. Yeah. So that's when it halts. And we can scroll a bit, fast forward. I think this one was a 10-minute halt. Yeah, this one was a longer halt. Oh, there we go, resumed. Okay, so we resume and the halt level is right around $4. So notice how the halt level becomes resistance now. You'll see prints go off, but just tons of hidden selling, holding it under that $4. Look at that. Tons of hidden sellers trying to get out on the offer there. Super bearish. Sellers keep coming in. So I would have locked in some of my profit here around 370, 380. And now my final target I'm going to look for is down in the 290 range. And why I specifically said in chat 290, if we go over here, we look at this consolidation level. Again, same thing. You look for that consolidation range on the chart, you look left to see what's going to happen right. And we got a lot of consolidation, 290s, $3 around that area. So again, I'm watching that $4 level. That's the previous halt level. Look at that. Tons of orders going on the offer, just not budging. So you're still clear to hang on. No reason to be covering or panicking out of your position. Still looking very heavy. So it is consolidating as anticipated right in this range. So that's why we took some profits here. And this is no surprise. It's not rocket science. People are seeing this as a dip buy opportunity. Longs who are uninformed, they're trying to dip buy this, and short sellers are covering, right? So it's not a surprise that we're seeing this. But I am anticipating still another move lower for that final target. So I'm patient. I'd be patient with my last position here, and just hold on until the stock, if it gives me a reason to exit, I'll exit. But so far, no reason to exit. No reason to exit this trade. Still looking super bearish, very heavy. There we go. Huge seller step down right there, 350. Now let me pause for a second. So notice how that huge seller just popped out of nowhere. That just tells you how important these psychological half dollar and whole numbers are to traders. Someone probably had a big position. They wanted to dump, and they liked 350 as a whole number, a round number. So they chose 350 to sell their position, right? Or it could have been a short. You never know. Some short might have chased this down. You never know. But those whole dollar and half dollar numbers are really key when you're looking for targets as well. So just keep that in mind. So we're making new lows here. And I'm anticipating, since it broke that half dollar, we're going to test $3 next. And again, that's just the psychological level. So you can probably anticipate a lot of people are going to want to cover or try to dip buy around this $3 area, big psychological level. So once it gets there, I want to see how it reacts. I want to see if it flushes right under $3 and fills me at 290, or if it touches 3 and then immediately shoots up. That'll show me there's a lot of support there. But we'll see in a second here what it does when it gets to 3. Here we go, we're approaching. There we go, we're printing 3s. And we just broke right through. And it almost came to my 290 target. Look at that, huge seller stepped in right there. Looks like it's about to halt here, but it actually does a fake halt. And those offers just get eaten up, probably shorts covering for their targets there, and bounces really quick. So it didn't reach that target, the 290 target, but I'm still confident in the trade. I'm just assuming a lot of shorts wanted to cover in that area, and it's no surprise that they did. It's a really good target area, but I'm still waiting, and I'm patiently going to hold for my 290 target, because this thing has given me no reason to be scared or exit my trade. So it has a little bounce here. Keep in mind, this thing is pretty spready, right? So don't be scared if it bounces 20, 30, 40 cents. That's just the spreads, right? It made this move because of the spreads, and it's gonna go down. It's gonna go up just as quick as it goes down, right? So don't let the spreads shake you out. So again, it just got slammed right back down. You see how it popped to 330, right back under 3 on the bids. Very bearish. And it looked like it was about to fill the target 290 there, but there's a lot of support coming in down here, a lot of bidders. So what ends up happening, I'll just fast forward a bit, but we end up kind of consolidating around that level for a bit, and we do end up breaking 290 briefly. But what happens is it breaks by a couple of cents, and then it just holds that support and tries to bounce again. So let's fast forward to that level there. I think it was, let's see, right around here. Let's see. So we got a big hidden buyers at 291, holding this right at the lows there. And usually that's shorts. They want to cover at the best price possible, right? So they'll put their orders right at the low of that big washout, and that's really common to see. But I still do feel confident. This is really bearish. It looks like it's really wanting to break down. So that order would still be at 290. Let's fast forward here again. I don't think this is quite when it happens. Right, so it's having a little bounce attempt here. And this is really healthy. This is really good because this is a super extended move. And typically we're not going to see stocks go straight down, right? That usually only happens when there's a negative catalyst, such as offering, um, or midday offering, stuff like that. Then you'll just see straight dumping and dilution. But this is just a healthy bounce coming in. The stock needs it if it's going to go lower. So probably some more longs are getting involved here. Dip buying, thinking this is we've put in the bottom. There's a lot of, there's different strategies out there. Some traders like to catch reversals, so they'll try to dip buy, try to anticipate reversals on stocks. And usually usually what happens is they'll end up bouncing a bit. Those longs that got in for the reversal will treat it as a scalp. They'll just take some profits into the bounce, and then the stock will curl and continue the trend right back down. But this could also has the possibility of bouncing and reclaiming that $4 level, that $4 halt level, and holding a support. Then it's back to somewhat bullish territory. So at this point, that's what I'd be looking for my exit. If the trade were to do that, if it were to reclaim $4 from this point, that was the halt level, big resistance. And if it did that and held support, that's when I would exit. But there's no reason to exit at all right now. Look at this, still heavy, still plenty of sellers. It seems like every pop is just getting heavily sold into. So it's still looking really good to trail. Big bidder stepped up there for a second. Now notice one thing. When you see a big bidders on the level 2, you see this big bidder stepped in again, right? You kind of see that as, some people see that as bullish, right? But they don't look at the tape and what's actually happening. Are those bidders holding the price up, or are they just getting taken out? And in this case, these bidders just get wiped out. Look at that, just absolutely wiped out. So those big bidders are not bullish at all. That's actually pretty bearish for the stock. If it's just getting swiped like that on the bids, that's a super bearish indicator. That tells you how badly longs want to bail and get out. So I think it's getting ready to reverse here again and head towards new lows. I'm gonna fast forward a little bit. Try here. Let's go a little bit more. Okay, here we go. So it's pulling back now. Look at that 291 hidden buyer. Looks like he's gonna get taken out. A lot of red prints going through right there. And right now at this very point, I'm pretty confident that my 290 target's gonna get filled. Based on this action right here, based on that bounce attempt, that fail, and now it's heading towards that previous support. Really bearish indicator, and we will see shortly here what happens. There we go. So 290s on the bid. We got two little orders there. Notice just two little tiny orders, but nobody would get filled there, right? Because those are under 100 shares. So they're just testing that level. They just printed it. And we'll see what happens here. Okay, so bidder stepping in again in front of that support. Again, a big bidder steps in at 3. But again, watch that bid. Big bidders right there. Look at that. Watch the tape. Look at that. Just wiped out right there. So these big bids have no influence on the stock. They're clearly not influencing the stock at all. Sellers just want out, and they're just taking out those bids like nothing. Okay, here we go. Looks heavy here again. And here we go. There we go. I would have gotten filled all out right there. So I'll pause it right there. So reached my final target there, would have reached, and you know, could it go lower? Sure, it can go lower. But the thing the thing about trading is you need to stick to your targets, right? You can't get super greedy. In this case, was this target greedy? It was a bit greedy, sure, but there was a reason to be greedy on this setup. And you know, you can't be greedy on every trade. There's specific trades where you should be greedy and other trades where you should be a bit smarter and lock in your profits a bit sooner. And on this context and this big context trade, you should be greedy because there's just so many longs stuck holding the bag. Like I said, again, there's probably insiders dumping this. It was a pump job, no news at all. Why would anybody be buying this stock, right? They knew that the market momentum was hot. They knew they'd lure in some longs and some traders. And obviously traders didn't care. They just chased this thing up, right? There was no catalyst, no news, not that I'm aware of. But they just chased this thing up and created the liquidity for these guys to just dump. And now we have a bunch of bag holders on this stock. So we'll resume here. And it broke down, see how it broke down briefly, but it didn't really go much lower than that. So that would have been a really good good cover target. And you know, you normally don't catch the dead bottom or the dead top when you're covering or selling. In this case, it was kind of lucky. But again, I looked left to see what was going to happen right. And clearly there's a lot of consolidation support in this area. So again, it could have gone lower, sure, but it ended up holding and kind of just chopping in this range until it closed. If we fast forward here, and you can just kind of see what it did towards the end of the day. So it kind of had another pop attempt, didn't really do much, and then just kind of held that $3 area. So yeah, that's the brief overview on the tape. I hope that helped you guys kind of understand how to trail your positions, how to know where you want to get that entry, that perfect entry. You know, you always want to wait for that 15-minute chart to break, and then you want to use the tape to show you that there's sellers coming in and that heavy selling. Now, one thing I will say though is when you're using the tape, it can also be a negative thing because in my case here, when I was looking at this trade, I was looking at the tape and seeing a bunch of absorbing and just tons of soaking, as we saw earlier, right around that level, right around the support, right? And for me, that really turned me off of the trade because I thought to myself, okay, what if they do a trap here? It breaks a bit and then squeeze. And yes, of course, they could have done that, but the probability is what you need to focus on, the probability of the setup. And, you know, 8 times or 9 times out of 10, this setup will work. So don't even think about it. If you see the setup and you see that tape confirming, approaching that support level, approaching that entry level, and you see the sellers coming in heavy, just join in, jump in, have your risk level, and you know where you're risking. You just jump in and, you know, let the trade work. You know, 8 times out of 10 this trade's going to work for you. So it's just a probability game from there. And you know, the times it doesn't work, usually it'll be on institutional stocks. So those ones are a bit trickier. And I actually thought this was an institutional stock. I kind of messed up here because I was looking at this insider info right there, 71%, and I actually mistook that for institutional ownership, which is pretty much nothing on this stock. So now that I look in hindsight, I really wish I caught this move, but you know, I let that institutional number get in my head, and I really thought it was an institutional the way it was trading because there was a lot of hidden orders and they were really absorbing some shares here. But again, that's one thing you need to keep in mind is usually the chart is a better indicator than the tape. You know, the tape is just there to tell you, you know, so to time your entries, stuff like that. You know, that's all it's there for. And then the chart is what's really telling you the real story because, you know, look at this chart, lower highs, failed flag attempt here, a lower high, and then breaking that support level where you know a bunch of longs are going to be bailing. You know, that's the real indicator right there. And that's what we look for. And that's why we love this pattern. So again, always focus on the chart. but use the tape to your advantage and use it to plot your entries and time your entries. And you don't have to be perfectly on time with these entries. So for example, when we saw it break down here, if we go back, you could have gotten in a little bit late and risked just a little bit more, maybe 10 cents more, but at least you wouldn't have missed the trade. So if we go back right here, so your ideal entry would have been around 565-ish, 560, but here, look at that. You see that printing on the bids right there? There's plenty of size to get in here, plenty of hidden buyers, so you could have easily entered here as well if you missed that first trigger. So don't be shy to enter a little too late. Just know that you're risking a little bit more, so maybe drop your size down a tiny bit more to account for that risk. But at least this way you get involved in the trade and you're not missing out. Because I know a lot of you guys sometimes will say you missed the trade, and it sucks. I know, trust me. I mean, I missed this trade, but it wasn't an execution error. It was just my own fault. But yeah, definitely, it's not bad to get in a little bit late, like 5-10 cents. It's not going to kill you. It's just you're putting on just a little slightly more risk, and which is totally fine when the reward makes sense. So in this case, if you got in at 550, I personally would risk off this 6. I wouldn't risk off 620 because these usually work immediately, these triggers, and if they don't, usually then something's wrong. But my risk would have been about $6, so risk about 50 cents, and the stock dropped to $2.90, $3. So you risked 50 cents to make $2 a share. So that's a 4-hour trade. That's awesome, right? So don't let that get in your head when you miss an entry. You don't have to be exact. You don't have to be right on the money. You can get in a little bit late as long as the risk reward still makes sense to you. So hopefully you guys found this video helpful, and hopefully you have a better understanding now of how to use the tape along with the chart and technical analysis to kind of plan your entries and really time them well, and also to plan your exits and your profit targets, and so you can maximize those trades and those winners based on the price action and technical chart levels. So that's it for this video, guys. Thanks for tuning in, and we'll see you in chat.